Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld with you for your Tuesday afternoon edition. Happy Taco Tuesday, everyone. I think what I'm going to start doing, actually, is I'm going to start incorporating part of my Tuesday evening plans. For those who don't know, every Tuesday night I go to a trivia night. Maybe I'll see if I can bring in some trivia into our fun for the show. For maybe there's not really market trivia, but who knows? Sometimes there's some fun facts out there. So happy Tuesday and happy Tesla Day to you. Anybody who's owning Tesla should be actually, if you're just long the markets, you should be thanking Tesla at this point in time for just being an unbelievable move to the upside. We'll talk about that here. I've been getting tons of questions about Tesla, as I did yesterday, but today might be even more impressive with what went on with Tesla. So we'll start things off with our top 7 markets out there. Craig Weil will be our guest today. He's going to be on the phone. He's teaching a class out in Philadelphia, so we will get to Craig here after a little bit, after our first segment. So if you have questions regarding anything to do with futures, send those questions on in at powertradingradio.com. Click the little button there that says Power Blast, or you can go to our YouTube channels. We're broadcasting under Online Trading Academy as well as Power Trading Radio's YouTube channel. All right, TJ's going to start us off with gold, which clearly today was a risk-on day. I mean, you saw these equity indexes just soaring today, part of that buy the dip move, and I don't know how much further that's going to go. I didn't think we'd see this big of a run. I thought we'd actually hit our head on some supply, but again, we can thank Tesla for that one. That said, when it's a risk-on type of day, the risk-off assets generally get punched in the gut. Today, we certainly saw that one right there. We look at the big sell-off today in gold. It was a pretty aggressive one at that. It was down 1.62%, bringing it all the way down to 1556, which is where it's at right now. Still, I don't think there's much to worry about with gold long-term until you get down below, let's say, this 1535 mark, and then you really have some accelerated downside move. But I think you're okay. Just was maybe a bit of a due sell-off. Just didn't think it would be this strong on gold, which is your worst performer by a good margin. Next on the list, crude oil. There you see crude oil continuing its slide back down below that $50 mark. It's actually at $49.42 right now. That was a slide about 1.32% on the day. Does not look pretty, my friends. There is a level that's a bit lower. The next area where I see where you may have some sort of stability is right around that 48.50 mark, but that's a ways down there. It's just going to continue to slide here. It's almost against my intuition, but it's like you got to short these rallies in crude oil just because the trend is so strong, although I do think you're going to see a bounce at some point that's going to be very, very aggressive. We'll wait and see when that one comes along. But right now, that was your number 6 performer. Number 5, Bitcoin. Bitcoin not doing so well today. We're down 1.16%, 9,168 on the day. You can see really for the past few hours, just been chopping sideways. Most of that sell-off happened in the wee hours and late last night. Brendan on your Power Trading Radio YouTube channel says, altcoins are exploding. Well, let's be fair. Not all altcoins are exploding. Some are, but I wouldn't say they're exploding. You're seeing a couple percentage point moves, but most of them are staying rather muted here. Now we're getting into some of these coins aren't really that popular, but I wouldn't say they're exploding just quite yet. Overall, that market is down for cryptos 0.5%. All right, moving on to your 4th place finisher. Let's go to the S&P 500. Go back to click if you wouldn't mind, TJ. Here is your ES on the day. S&P was up 1.5 percentage points. A beautiful day. This is the S&P futures. For most of you that are trading SPY, let's check out SPY here just so you guys can see the difference. This is why we like to look at the futures markets, because we do get those after-hour trading, so we don't see the gaps. Now, if we look at SPY, you will notice that why am I not getting SPY? This is not wonderful. So I'm trying to get SPY, and I just don't get it. All right, well, I guess we're not going to get SPY there. Let's go SPY on this one. SPY. Okay, there you go. So you guys can see almost all of this happened on a gap up. Notice this is the ETF, which tracks the S&P 500. There was a huge gap, so you really didn't get too much of a chance to play an intraday swing or intraday move. When you look over here on the future side of things, you can see there was plenty of opportunity there. So that's what we have, the difference between these two markets. S&P on the day has missed the podium by just a bit. I mentioned 1.5% gain to 3,297. It just eclipsed this area of supply. I actually thought if we did come back up, we would stall right around right where we're at and start heading back down. Now it looks like, boy, I just hate to say it, we're challenging those highs that we established a couple weeks ago. So that will be their next stop here if we can get above this 3,300 mark, which is where it's stuck at right now, literally on the dot to that number. Okay, number 3, podium time. Just, I guess you could say it was a tie for 3rd place with the S&P and the Russell, because the Russell it was also up 1.5%. Finishing the day, 1,656. And I guess tied for third. 24-point gain. And also, if you notice technically, I like this one best because it's coming right into this area where we're at 5 days ago where it sold off, right? It closed the gap and then sold off aggressively from there. Now we have a 2-day monster rally, which we'll see if it has momentum to carry up above these most recent highs. If it does, you're looking at probably about 1686 on the Russell 2000, which was your bronze medal finisher. Today, of course, we know the Tesla is a member of the NASDAQ 100, which is the real reason why you saw the NASDAQ rip to all-time highs today. Just a ridiculous day. I mean, the Tesla is, I tell you what, this is the ultimate candidate for not pump and dump, but I'll explain why it's all happening so quick and so fast with Tesla. There is your one gigantic candle that happened today. Again, 2.1% for the NASDAQ composite. It's actually even more than that for the NASDAQ 100 because obviously you have less elements to weigh it down. All in all, a phenomenal day, all-time intraday high, breaking through those highs. So phenomenal for the NASDAQ. That was your second place finisher, but it did not quite beat the 10-year. All right, this means that yields have gone where, my friends? That's right, the yields have rallied. You see the price of the bond falling aggressively today. That means that yields spiked. We saw a 5.46% increase in the yield on the 10-year today. Lock in those homes ASAP, lock them in. We jumped all the way to 1.6. Now, it's still incredibly low given the grand scheme of things with regards to interest rates, but that's where we are at right now with that 10-year yield. 1.6 or a gain of 5.46% on the day, and that made it your best performer by a long shot. All right, that's your top 7 markets. Hopefully some of those put some green into your pocket. Let's take a look at what caused, not all of this, obviously this is not just Tesla by itself, but certainly from the NASDAQ perspective, it was Tesla. The question was, from Larry, do you think this current Tesla run has anything to do with earnings? I do not think it has anything to do with earnings whatsoever. There's a factor I used to look for a long time ago in the late 90s, which was short interest. The short interest just tells you what percentage of the shares are short at any given moment in time. And normally the data is lagging, right? It's usually 2-3 weeks old, depends on where you're getting the data from. But if you use something like Yahoo Finance, it's about 2 weeks old. What makes somebody like Tesla different, especially from a share price perspective, is the number of outstanding shares. So right now when you look at Tesla, you're looking at a company that has 180 million shares outstanding, right? 180 million. Of course, you're looking at a share price that's roughly $900 right now. It hit $968 today during the trading session before falling $100 in 5 minutes. When we look at something like Ford, you guys look at Ford, you go, Ford's trading at $9. Who cares? It's garbage. Tesla flew past Ford today, but part of the reason is shares outstanding, right? You have with Tesla 180 million shares total outstanding. With Ford, I'm looking up right now, you have 3.89 billion, okay? Of those 180 million shares, this will be a nice trivia one for you, out of 180 million shares of Tesla, what percentage of those shares do you feel are short right now? Meaning people think that this stock is going to go down. This might shock you, and this is why we're seeing what you're seeing with Tesla today, and I think over the last couple weeks, really, has been the amount of short people. And it's called short covering. Those are called a short squeeze. So TSLA, let's bring up that chart. Here is your Tesla chart. Oh, it was there for a second. Let's go TSLA. Wait for a sec. What is going on? TSLA. Okay. TSLA. Perfect. There's your Tesla chart for the past 2 days. Well, you're going much further than that, but just take a peek at the gains from yesterday. Yesterday was amazing because it happened during the trading session. It was one gigantic up move. Right now, there are 13%, we'll run it up to 14% of the total shares outstanding. That's 25 million of 180 million shares are short. So there are some people that right now are literally losing their homes. There are companies that could go bankrupt because of this move you saw today because they were short. And what happens is once things start moving up against you so quickly, you are forced by your brokerage company to close those positions. Remember, when you short, you're borrowing shares from somebody else. So let's say, and we'll include our audience out there. We've got Dave and Gayer joining us in Chadsbury. Hello. Hello, Trent and Dunkster and Brendan. Good to have you guys with us. If you borrow shares in your trading account and you say, okay, I want to short Tesla, you're literally borrowing them from somebody else's account at your brokerage firm. So it's at their discretion. At any moment in time, the broker who you borrowed those shares of Tesla from, remember you borrowed them from the broker thinking it's going to go down in price and you're going to buy it back at a cheaper price later. That broker can say, you know what, we need those shares back right now without much warning. I don't think they have to give you any warning. Now, normally they don't do that, but this is a fairly thinly traded security. What I mean by thinly traded, there's only 180 million shares out there. That's not a lot of shares. We look at somebody like Ford, you have 9 billion. Well, or did I say 9? I think I said 9 billion earlier. Make sure I got my numbers right. It wasn't 9 billion. It was 3.89 billion. My bad. But the point is, if you have shares of Ford and you're borrowing those from somebody else, odds are they're not going to get called. But with Tesla, the odds of being called are much higher. So what happens is now the brokerage firm calls and says, all right, Merlin, you borrowed shares from us to short Tesla. It's going up in value. We need to give those shares back to the original owner. They force me to buy it back. So now all of a sudden you get this short squeeze where the buying pressure, the up move moves so quickly, it forces those people who were short to close those positions, whether the brokerage firm does it or whoever borrowed those shares is just hemorrhaging at the seams. This is what happened out there today. Part of what's happened out there today, you had some people that just got absolutely slaughtered on a short squeeze. What would be interesting to see is in the next week or next reporting on the short interest, where it stands. Because I assure you, it's probably going to be a lot lower than 13.8%. However, there are many people like myself that look at this chart and go, this is ripe for shorting after that parabolic move. I tried to do that yesterday. I looked at it, and the options were just way too high for me, so I backed away from it. But at some point, this is going to be a beautiful short. So part of it, I think, is the short covering. The other part of it, I think, is the opening up of China. China saying, you know, we have some optimism out here with regards to factories in China for Tesla. And all of a sudden that market opens up. Bada boom, bada bing. You got a lot more money in your coffers. Congratulations, Elon Musk, for your $13.5 billion gain today. Most of us working our 8-hour days, collecting a few $100s, and you made $13.5 billion. I applaud you, my friend. All right, that will do it for our opening segment. When we come back, we will have Craig Weil on the program. We're going to talk about, well, I don't know what we're going to talk about. You guys can help us steer that conversation. Probably a futures-related show. Craig's teaching out in Philadelphia today a core strategy class. So if you have any questions, feel free to send those on in at powertradingradio.com by clicking the Power Blast button, or go to our YouTube channels. Join some of the discussions either on Online Trading Academy or Power Trading Radio's YouTube channel. Send in your questions. We'll be right back after a short break.
What if you knew the income strategies professional investors used? The strategies designed to generate active income from the financial markets. After all, no one's going to care more about your money than you.
I learned that I can be in control of my 401k.
I used to work for money. Now I have my money working for me.
With the right training and guidance, you can learn the skills to become a more confident investor and make your money work harder for you. Want to find out what's possible for you? You can, as long as you're willing to take the first step and call OTA today.
Call for your free tickets right now, and you'll also receive a free Professional Insiders kit loaded with lessons from some of our top instructors on topics like enhancing your retirement strategy, capital preservation, and income generation. The Professionals Insider Kit makes it so you can get started right now.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today.
Click is something I wish I had when I started because it facilitates the learning process a lot quicker.
This is not about taking many trades, it's about taking the right trade.
It helps me save myself from myself. It's just a revolutionary educational tool. It just propels you through the learning curve.
The biggest shock for me is the level of innovation that happens within the company, and it's continuing.
It's just perfect in this new century of trading.
Everyone's on the same side, and I think that's what I love about it more than anything else. Helping each other, supporting each other, all with the same objective. Again, wonderful.
There's no mountain high enough that the leaders in this organization won't climb for their students. They'll just never give up.
It can only help. It can only make one a better trader.
Gives you one of the most valuable things we all have, and that's time.
Welcome back to Power Trading Radio Live with your host, Merlin Rothfeld, and today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. It is your Tuesday edition. We have a great guest joining us today who's in Philadelphia teaching a core strategy class out there. So we're going to welcome Craig Weil back to the show. Craig, how you doing?
Merlin, I'm great, thanks. How are you?
I'm wonderful. I'm looking at a chart here that reminds me of the dot-com bubble. Reminds me of the late 90s where... Yeah, you know it. Tesla.
I know it. Yeah.
You know, I'm gonna I'm going to start with a story. Just to as TJ keeps this chart up here, I'm going to start with a story. And the exact numbers were off, but you guys get the point here. I was on the trading floor back in the late 90s, and there was a company called Qualcomm. And this gentleman right by the front door, I forget his name, but I was on the trading floor with 180 retail traders. This gentleman shorted some Qualcomm, and I didn't know what happened, but he apparently shorted early in the morning. It rallies 100 points intraday, and he had 1,000 shares. So there's a $100,000 loss like that within one day. And this is a 100-point move in one day. That's incredible, right? So what does he do? He should have just gotten out way earlier. Instead, he was too prideful, said the stock has to go down, can't keep doing what it's doing. The next day, it opens up with a 40-point gap. He proceeds to short another 2,000 shares, rallies 40 points intraday. That man was never seen again on that trading floor because he blew his entire account. What we're seeing with Tesla here is very akin to the same thing. You're seeing just incredible moves, which we could say is people speculating on the future of Tesla and the opportunities and how they're going to dominate the entire world. I think Bezos has Elon Musk beat there. However, it's also short squeeze, which is a topic of question here today. I've had someone ask me about that one as well. So I wanted to start with that overall view of Tesla. I don't know, you guys are probably following that one today, Craig?
Well, we looked at it. I looked at it a couple times in class, and I always these kinds of things. As long as I've been doing this, have always amazed me how people do things in the market that they would never do on their own as consumers, and it's a perfect example of people acting on perceptions. I absolutely don't know what gets into people when they do things like this, when they would pay an exorbitant price for a company like this. I mean, just a week ago, it was
$600,
half of the price that it was or it closed at today. And so, I mean, just think about that. What has changed about this company in a week that would make it twice as valuable as it was a week ago? And the fact of the matter is, when you chase price like this, and obviously whoever bought it today was either caught short or expects it to go higher, and they could be right, but at some point the stock will have to validate this valuation. Mm-hmm. And right now they don't make very much money, and it's the automobile industry. I mean, a company like General Motors makes billions of dollars every year, whereas Tesla, I think they finally turned a profit. They might have made 120 or 30 million in the last quarter. So it is what it is. You can't fight it, but it is quite remarkable when these things happen in the market, and they don't usually end well. So we'll see.
Yeah, no, but it's exciting, and this is where the challenge is. One of the things that we talk on this show, I know you teach in your classes as well, the things that you have to pay attention to avoid catastrophic losses, but also what to avoid to not have to avoid inconsistencies. And this is the type of thing, and I know Ruben's probably here with me going, I love Tesla, it's the greatest thing ever, and I'm long it. Great, that's good. But what happens here with things like Tesla is you get emotional because you see a move, you see something that's moved almost 100% in just a couple of weeks, which is phenomenal. We get emotional, we want to jump on these things. And it doesn't matter whether you're trading futures or Forex or options or any other asset class, there will always be a point where you look at a chart and you go, damn it, if I was just on the right side of this thing, I would have quadrupled my account in a week. And then all of a sudden you start trading something that you probably have no business trading. And I think right now, Tesla is one of those ones. I'm going to encourage everybody watching right now, do not touch Tesla. Leave this one alone. I don't care whether you think it's going to go up, down, or sideways. The moves are too big here. And I just think it's just way too much risk for you guys. If our job as traders and investors is to go with high probability moves, look for things that aren't dangerous to us, this is the biggest red flag I see in the financial markets right now is Tesla.
Well, yeah, when the volatility gets like this and there's no, and you can't make any sense out of the markets most of the time, but this one really is mind-boggling. But again, it's not like we haven't seen this picture before. As you mentioned at the beginning of our segment today, that's what the NASDAQ bubble was all about. I mean, you could put up a number of stocks that, like Tilray or something that said, 100-point range in a day after the Canopy Growth acquisition by Constellation Brands.
And look what happened to it.
yeah, look what happened to it. I mean, people paid almost, I don't know, I don't have the chart in front of me, but it could have been close to $300 per share, and now I think it's under $18.
Yeah,
I mean,
it's 18. And it's great you bring that up, Craig, because we had a viewer out there, and Brendan, I know you're one of our regulars, but Brendan was watching this show, and he was in it, I wanted to say $40 or $60, and that day it rallied up to 150. He's like, well, what would you do? And I said, I'd get out. I'd lock in some profits here. And the next day he's like, why did you tell me to do that? It would hit 300. And I said, just watch. And I think in hindsight, you look until it's $18. There's always these opportunities. And if you find, this is why Craig's class today, he's sitting there saying you're setting an entry, a stop loss, a price target. You're always going to have those variables in place. And if something far exceeds your price target and it's just blowing out all your expectations of how much profit you're making, take money off the table. Do not sit there and go, oh, Tesla's going to go to 50,000 a share. I saw someone today saying 7,000 a share for Tesla. I'm going, oh my God, you got to be kidding me. It could get there, but it's not going to get there from, its $800 price target right now, and it's not going to get there tomorrow. It's going to be a long, drawn-out battle of ups and downs. So if it moves too far, too fast, lock in profits, guys, and move on. And you've seen this before, Craig.
Well, of course, and we didn't see it that long ago with the Bitcoin craze, where they raced that up to, what was it, $20,000, and it fell back very sharply. I mean, people get this frenzy, and they do things in the market they would never do as consumers. They buy things at retail and are fearful of buying things at wholesale. That never works in the long run. The fact of the matter is that you can look back in hindsight on I've had over 90,000 transactions in my career.
Wow.
And that number is probably low. Every single one, I could have gone back and said, why did I take my profit? Why didn't I take my profit? Why did I adjust my stop loss? Why didn't I adjust my stop loss? And on and on and on and on. We don't have that luxury when we engage the market. We have to draw literally some lines in the sand, and you can always see what the perfect move would have been after the fact, but we don't have that luxury, so we have to be almost robotic-like in our actions, create consistent actions, because consistent actions lead to consistent profits. And we play the long game. This is not a get-rich-quick scheme. This is incremental wealth building and income generation, and we have to accept that and recognize it. And these aberrational moves like this, we don't do things on one-offs. We do things based on things that happen more times than they don't. And just because we have a reaction in a stock like this doesn't mean it's going to continue, and it certainly doesn't mean you can expect it from something else, because most of the instruments out there don't have these exponential moves. And I call it fool's gold. Lucky for the people that have it, but I think they are probably foolish if they don't take some money off the table. If you don't take your money, you won't make your money. So, it is what it is. It's fascinating. It's herd mentality. It's perception over reality. And only looking back upon over a long period of time can you make a case for maybe a particular move.
It wouldn't surprise me, guys, to see Tesla over the next week or two drop significantly. I think a lot of this has to do with that short squeeze. You could very easily see this thing back down to the 500 mark in no time at all, which would be almost a 50% drop off its high it achieved today. So be careful with that one out there. We're going to take a quick break. Before we do, I'm going to read this question from Brendan, which has a lot to do with psychology, and I think that you and I both have a lot to contribute on the answer here. So I'll read it to you now so you have a chance to think about it. Brendan says, as an active short-term trader, how do you keep yourself on the right track psychologically when dealing with losses or bad performance? Long term, I continue to outperform. Short term, I'm continuing to do poorly, although it's more of a sideways action right now. So it's an interesting one because we have to, at least, Brendan, you've taken that first step and understood that there's a distinction between your long term and your short term. And right now, if the focus, or if the best part about it is your long term, I'd spend more time allocating capital there and getting more return there. And maybe in the background, working to fix that short term. So we'll talk with Craig Weil about maybe what are some solutions for that, how he has dealt with it in the past, and how I've dealt with it in the past. If you guys have questions for us, we got one more segment with Craig Weil. Send them on in at powertradingradio.com by clicking that Power Blast button, or go to our YouTube channels. We've got a pretty active group out there today. Say hello, ask some questions, and we'll be right back with Craig Weil after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way. Click here to get started with Online Trading Academy.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
You're listening to Power Trading Radio Live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.
Hello, everybody. Welcome back to Power Trading Radio. It is your Tuesday edition. Taco Tuesday out there. I'm sure most of you in the Midwest are going, tacos? What are those? Well, we're in California. Got plenty of tacos out here. We've got Craig Weil joining us on the phone today. And Craig has spent many years on the floors out in Chicago doing a lot of the open outcry exchanges. For some of you who don't know, that's the trading places type of stuff. The stuff of legend, where you had people yelling and screaming back and forth, and in many cases crying, which is why they called it open outcry. I'm just kidding. That's my own little twist. Craig, right before the break, we had a psychological question from Brendan, and for those that don't know or maybe experiencing it, trading's biggest component is psychology. It's not necessarily analytics. It's how you deal with the different issues. Brendan says, as an active short-term trader, how do you keep yourself on the right track psychologically when dealing with losses or bad performance? What are your thoughts on that one? Do you ever go on losing streaks where you just throw your arms up and say, I'm done with this?
No, not for a period that lasts longer than a day. So I definitely have a loss limit that, sometimes you get out of sync, sometimes you break your rules, sometimes you push the envelope. One of the issues with this crazy business is, and most of the novices think that there's always something about to happen. They see a red or green candle and they act. The fact of the matter is that most of the day is unproductive in the fact that we can't control anything other than what we can lose. We can't control whether price comes back to the place where we want to enter. Once we enter, we can't control whether it gets to our objective or not. And so the difficulty is when you have days where there's not much happening in the instruments that you follow, you tend to try and force a trade, and that generally will not work. If I've heard it once, I've heard it 100 times, mostly with a basketball player or something, and the interviewer says, "Hey, Michael, you went off for 40 points today, but you've been stinking up the court for 2 weeks. What changed for you?" And they'll say something like, "Well, I let the game come to me." And we really do have to do that in trading. We have to let price come to us. We can't chase it. And as far as the losses that we incur, I always treated losses like a business expense because I have my own business. I've never worked for anyone for 46 years, and everything I did as a floor trader and now goes to my bottom line. So at the core of my being is a risk manager, and so anything I can do that will eliminate some risk, I try and do. But we can do everything for all the right reasons and still lose. The way I deal with losses is, nothing more than a light bill or a cable bill. The psychological aspect of it, and this is I think everyone that's done this for a while to a person can attest to this. When things are going good, you feel like that's the way it's going to be forever. Right. And so you get a little trigger happy, or you do something that maybe interrupts that winning streak. But you make the assumption, that's the way, I got this now. This is, it's off to the races. And when things are not going well, you think, oh my God, I got to find a new job. I'm not going to be able to do this anymore. And so you have these highs and lows emotionally, but you've got to, keep things in perspective. Just like, in Las Vegas, a casino might have, somebody at a crap table or a blackjack table that is a hot roll of the dice, or their dealers are cold, and they're losing money on those tables, but they know in the long run they will ultimately come out ahead because probabilities are on their side. And so the great traders and investors understand that it is a game of probabilities, and every once in a while you flip that coin and it comes up the same side several times in a row, but eventually it's going to even out, and if you're doing things the way we teach and the way we promote, you're going to come out ahead in the long run. When you do have a losing streak, you've got to analyze what you're doing. You've got to basically review your trades any day. Find if there's something that you've done that you could have avoided, or you broke a rule. I never regret anything I do as long as I follow my rules. Right. But, I'll admit I'm only human. I will try to force the action from time to time when nothing's happening, and it generally doesn't work out very well.
Right. Forcing it is a recipe for disaster for almost everybody out there. I want to piggyback on a couple things. What Craig was just talking about is critical, and part of, I hope, what you heard from his monologue there is, look, Craig trusts himself. He's been doing this for so long. He knows his routine. He knows that his strategy has a higher probability of winning. Not necessarily winning, but that if he is wrong, which is okay, it's a cost of doing business. It's like I say, it's like hitting a red light while driving your car. It's going to happen. Big deal. I just can't let that ruin me. And I'll go back to an example. I did a blog entry, this is probably a decade ago, and I am obviously not a Yankees fan. I'm a San Francisco Giants fan and a 49ers fan. Derek Jeter went on I think it was a 1 for 31 hitting streak. Meaning he hit one time in 31 at-bats. For him, that's an ultimate failure because over his lifetime, he batted over 300, meaning 33%. So do you think he went up to the bat the next time and thought, I'm a failure, I'm not doing it right, I suck at swinging? No, he went back and did exactly what he does every single time, and maybe something was tweaked a little bit out of line, but he got back on track, and over his career, even though he had this horrible batting streak for the 32 games or 32 at-bats, all of a sudden he's right back on track. And I think that's how we have to approach our trading is when you start going down those rabbit holes of depression or that feeling like I suck at this because I keep losing, that's when you have to put the brakes on it and analyze. What I love about what Brendan, who sent in this question, talked about, he said 90% of his trading is long-term and that's where he's the most successful. Great. That's exactly what I would suggest you do. And keep a small amount there and just try to find out what it is in that short-term stuff that's causing you angst. To me, you already mentioned it, it could very well be that you're forcing trades. Craig, I was just saying, look, I got to let those trades come to me. And sometimes you'll sit there all day as a day trader, and if you're doing it right, you'll look and you just don't find something that comes to you, and you feel like you wasted an entire day. Other days, it seems like trades are flying at you all day long. So that's just part of what we do as traders, and it's something that all people have to understand at the very beginning. Craig, let me read one more real quick one here. This is from Sabrina. She says, Merlin, will you ask your guest what his best advice would be for a newbie? So let's say you got someone just coming into the financial markets. What would be your recommendation, Craig?
I'd didn't quite understand the question. From what aspect of a recommendation to a
say someone walks up to you and says, "Hey, Craig, I'm thinking about getting into the financial markets. I really want to be a trader. What would be your biggest piece of advice to me?"
Outside of taking one of our classes.
There you go. Gratuitous plug.
Well, I would say that trading is not complicated, but it does take a commitment, and it takes a lot of hard work, and it would take a lot of time. You need to, study price and price behavior, and just the experience that one goes through in this evolution in this process is going to take a while. And so if someone wants to do this, they can definitely succeed. But it like anything, like getting good at anything, it takes practice. It takes learning from your mistakes, getting better. And anyone that wants to commit to this has to understand that it's not a fly-by-night thing. It's not a gut reaction thing. It's not an intuitive thing. It is a measured a plan, having a plan for every single thing, administering that plan consistently, and learning from your mistakes. Mm-hmm. So, it's there to be had, but not that many people are willing to give the time it takes, when in fact, all the people that and their vocations and jobs that they've had for years and years, they don't realize that it took them a long time to get to a place of mastery or perfection, and no one could step into their role very quickly or follow them around for a week and become an expert. And so it needs patience, discipline, persistence, but it's there if you want.
As I remember my mentors early on helping me out, and unfortunately I didn't give them as much credit as I should have given. One thing that you have to understand about this, whether you want to learn to trade options, futures, for at any profession, it's much easier to fail at any of these topics we talked about today than it is to succeed. If you want to succeed at it, you have to work, right? It's not going to be like, oh, I just took a class and all of a sudden I'm the best trader in the world. Absolutely. You're going to be learning about your own inner demons. I know you see Chadsbury out there saying he's new, Sabrina as well. Look, you're going to find things out about you that you probably may not have known about your stubbornness, your impatience, your recklessness, things like that, your organization skills. It all comes up right at the forefront when you start trading and investing, simply because that's what the market's going to do. It's going to test your weakest thing. That's why we have Dr. Woody Johnson in this program so often, is because he brings light to the psychological battles we go through. Of course, we have great traders like Craig, who's teaching core strategy out there today, which is, let's build that foundation. Let's make sure that we have a set of rules to follow. Most people fail at this. Why? Bad risk management. They don't have a plan in place, and they're picking, this guy's pick from TV. Oh, he told me to buy that stock, and this one over here told me to buy this one, and oh, this guy says I should use this indicator. You're jumping all over the place. It's about using a strategy and staying within the boundaries of that strategy, tweaking it a little bit to fit your personality, but bottom line is you have to have a strategy in place. You need to know how these markets truly work, and in many cases, you need to cut out the outside noise and peripheral people who are trying to influence you to jump on the trade that they are in, the pump and dump scam groups, etc. Greg, tell me a little about where you're teaching. I know you're in Philly this week, right?
I am in Philadelphia this week teaching core. In 2 weeks, I'll be in New Jersey, southern New Jersey, in Freehold, teaching a futures class. And then I'm coming to see you in around March 2nd to deliver a futures class in Irvine. Then I'm going to be taking a month off for myself in California, so that'll be fun. I have one other scheduled class after that, but it's not until April in Minneapolis, and I haven't been there for a while, so I'm anxious to go back and deliver futures there.
Awesome. So, well, I'm happy to have you out here in California. We'll have to go out and go do dinner or something. So, Craig, thanks so much for coming on. I appreciate your insights, as always, in helping our viewers understand these markets, whether that's from a technical or psychological perspective. I hope you have a great remainder of your class out there in Philly and in Jersey, Irvine, and Minnesota. So thank you so much for coming on today. We appreciate it.
Merlin, it's always my pleasure. Thanks so much, and good trading to everybody.
Thank you. All right, take care. Guys, that was Craig Weil, longtime floor trader out of Chicago. He's in Philly this week. Of course, if you'd like to take a class with Craig, and one of the great things, as Sabrina was asking there, and it was funny because Craig says, other than take a class, yeah, that's one of the beauties of it. You know, if you take a class with Online Trading Academy, you can retake those classes as many times you like on a space available basis. And I would encourage you to do that, because you might take a class with Craig Weil and absolutely love it. And all of a sudden you take the next, you retake your class, and let's say it's Brandon Wendell, and you're like, oh my gosh, not only did I learn better that foundation to reinforce everything, but he taught me a new little tactic or tricks that he did in the past. And then all of a sudden, Derek Zellick is your instructor, or you got Michael Young. I mean, the list goes on, but all these guys bring something to the table, but it's all built off that same basic foundation of core strategy. Then all of a sudden you can get into the specialist classes like futures or Forex or options. I mean, the list goes on. So it's really important to have a great foundation, to build your trading profession or career or hobby, however you want to treat it, on top of that basic foundation. So if you'd like to know more, there's links showing up in your social media right now. You can simply click on that one. You type in your zip code. That'll get you all the information you need to know about Online Trading Academy and which of our 48 physical brick and mortar schools are nearest you. Each one has free classes, paid classes, community events, and a support team there to help you understand how these financial markets truly work and hopefully use them to your advantage. So click those links and hopefully get more information for you. All right, let's see. I had a couple things here I want to get to. PBJ says, be willing to become a chart junkie. Absolutely. I mean, it is an addiction to look at these charts sometimes. Like, ooh, wow. People just don't get it. I am definitely a chart addict. Let's see, what else do I got out there? Dunkster says, I've panic sold way too many times, as have I. But here's the interesting thing, though. It should never get to the point that you panic sell, right, Dunkster? Because if you have your plan in place, your stop loss should not be a panic point. Your stop loss should be that point where you go, okay, I'll get out here. It's a panic point for you because it probably moved too far, too fast. It went past your stop loss, or you didn't have a stop loss, and now it's a panic sell. So to me, that's a trade plan problem right there. You should never get to the point where you are panic selling, right? Never, because you have a stop loss in place, and that stop loss should never be a panic point, if that makes sense. All right, Merlin, does patience come with experience? No. I mean, it can. For me, it had to. I think there's other people that are very, very patient. They're inherently very calm, structured, and organized. So I think, we talk about psychology so much and why it's important to understand your personal makeup. There's a lot of psychological tests that you can run. We've done some with different psychological companies. You can actually go to otacademy.com. You can register there. There's a bunch of free videos. We did one with Martin. I'll just say Martin Briggs. I always get the name wrong. Yeah, I think it's Martin Briggs, which is one of the major psychological tests, and you can find out where your strengths and weaknesses are there. It's like a identify your profile type of thing. Those are great in understanding the basic weaknesses, but trust me, if you don't know what your weaknesses are, just start trading with real money, and the market will show you very quickly what they are. I think patience is. Some people are just born inherently with being better, being patient. Others are not. Some people panic all the time, and you have to learn to become more and more patient. Myers-Briggs, thank you, TJ, for that one. I think Martin just didn't sound right. Myers-Briggs, you can YouTube that video, or not YouTube. You can go to otacademy.com and type in Myers-Briggs, and you'll see the video there. It's a good one about psychology. All right, let's see. What about losing faith in a trade? Heath says, what about losing faith in a trade? I can't seem to get rules around getting out when things are going against me and feel like I've followed a rule. Remember, if you ever make a trade, and a lot of people send in their trades here on the show and say, hey, what do you think of this? I want to go long here, and this is my target. Where's your stop loss? When I'm in the jerk mode, as I sometimes get, these mean modes I get in, I won't answer your question unless you give me a stop loss, because a stop loss is more important than what your profit target is. So if you ever send in a trade that you'd like me to analyze, I want to know, number one, where did you get in, right? That's clearly number one. Number two is, where are you getting out? Where's your stop loss? So for Heath, when you're saying, I can't seem to get rules around getting out and when things are going against me, you shouldn't need to put rules around it because you already have a stop loss written down. As you go into the trade, you should know exactly where you're getting out. It's that simple. So then you never have to worry about fear or struggling to get out, because you just do it. You even put the stop loss in the system, and you don't have to worry about that at all. All right. I get 30 minutes. All right. I could read. We could do a show where I just read your comments, but I feel like I'm staring off to the side. Let me finish up the show today. We got a lot to talk about. We're gonna have a very special show tomorrow. I would encourage all of you to tune in and watch the opening segment tomorrow. There is a lot of very big news, and we have a pretty big announcement coming out tomorrow. For the U.S. dollar, tomorrow, this is the February 5th, we've got trade balance numbers, crude oil inventories, ADP non-farm employment change, and the ISM non-manufacturing PMI. You look at the euro, you're looking at final services PMI as well as retail sales, final services for the British pound as well, and then trade balance for Canada as well as Australia. Moving on to your Wednesday earnings calendar, Disney really didn't do too much today. It wasn't that big of a deal. You had Toyota Motor Works, which probably not going to come out with the same results as Tesla. GlaxoSmithKline, Daimler AG, Suncor Energy, O'Reilly Automobiles. You got MetLife, Humana, General Motors, Boston Scientific, Qualcomm, and Merck reporting earnings tomorrow. There you go. Those are some of your majors. For the guest for tomorrow, we got Ron Lembo on the program. He's been on the program a few times this year already. It was a maiden voyage in January. Now we'll start diving a little bit deeper into some of the trades, things he's seeing. If you have any questions regarding the equity markets, I'm sure Tesla will probably be a topic of concern tomorrow as well, as I'm guessing it's going to sell off a little bit. Feel free to send those comments and questions in at powertradingradio.com by clicking that Power Blast button. If you liked what Craig or myself had to say today, click the little thumbs up button on your YouTube channels out there. Give us a little bit of love. If you'd like to know more about Online Trading Academy, you can simply click that link showing up in your social media channels or at powertradingradio.com. It says free class. You click it, type in your zip code. They get you all the information you need to know about which Online Trading Academy is nearest you. That will do it for today's show, our lengthiest show of the year so far. Hope you guys enjoyed it. Until then, happy trading, everybody. We'll see you tomorrow. Take care.
You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.